this cheap, anywhere else in the world, stocks trading at these valuations would be seen as steals. China's stock market is trading at a record low valuation. And when you get those kind of valuations, you don't need a lot to get it up. Now, this might or might not be the catalyst, but when your starting point is the valuations that you're seeing now, even if it's not the perfect bazooka, it might be the catalyst that causes that market to go up.
Might be, okay, with the market at, just below 2,700 or so. I suppose any positive news could potentially unleash a big rebound, which is what we've seen the beginnings of. How sustainable, though? Can it last?
Well, it depends, right? I mean, the reason I use the word might is because when you're dealing with confidence, and this is what this comes down to, it's anyone's guess. You know, is this going to be the measure or the sign that investors in China are going to take as the turning point, even if they don't think that this is going to be a direct turning point for the property market? I think some might read in a positive way that the Chinese authorities are at least beginning to take this a bit more seriously. There's been a lot of frustration that the measures that have been put in place over the last year or two have been very incremental. Some say this is incremental too, but it's certainly a multifaceted approach. And again, it comes down to rock bottom valuations. And when the government at least seems to be taking this more seriously than they have in the past, it could be what the market needs to go at.
John, it's very clear that the authorities are hypersensitive about oversteering with stimulus, as they did with, as was the case in 2007, 2008, and they created asset price bubbles. Is that part of the narrative here? Is that the concern, or is China so deeply mired in deflation that you've got to be very careful in terms of how we approach this market, even if valuations look like they are at a trough?
Yeah, I think maybe what has delayed the responsible authorities seemingly has been a poor experience they had in 2008 and 2009 with the global financial crisis. When they stimulated too much, it resulted in all kinds of overcapacity, poor allocation of resources, and they've been loath to repeat that. And perhaps the consequence has been they've been too timid this time, and that's certainly been the perception of the markets. And unfortunately, when you try one measure after another and it doesn't work, people begin to lose confidence that any measure will work. Now, this approach that they announced today, at least it's 4 or 5 measures simultaneously. We saw the result in the US market in particular, where you saw, I guess, a lot of short covering. But whether or not it feeds through, we think is going to be dependent on whether investors think that this is going to lead eventually to increasing consumer confidence that does things like gets asset prices up and property prices.